All right. Well, let's get started. No need to belabor the point. Good afternoon, or morning, or evening, folks, wherever you are. Welcome to another one of our Data Urban Digital discussions. Excited to have my former boss, Doug Holtz, Eakin, with us, current president of the American Action Force. So, as always, these are very loose conversations. There's about 15 of us. If you want to ask Doug a question, just feel free, or join the conversation. Feel free to unmute yourself, or if you want, just put a message in the chat box. So maybe I'll start this with a little story, Doug, because I don't know if you remember this, but some people still blame me for you leaving CBO, because when I when I interviewed at Syracuse to do my graduate work, I think you were chair at the time. Yep. And I interviewed in the spring, and I asked if anyone was planning to leave for whatever reason. I said, is anybody leaving? And you kind of looked up to the ceiling and said, no, I don't think so. And I think 2 weeks later, it was announced that you were taking over at the CEA. And so then years later, I go to CBO and I ask you the same question, and you're like, no, I don't think so. And I think it was probably 2 years later where your term was, people still kind of point their fingers at me a little bit. So
the good news is I'm not closing down the Zoom. We're going to finish this.
Okay, right. Well, we'll see how it goes. We'll see. So again, I don't have like an agenda for these, but I thought maybe we could talk about two things that obviously you have expertise and thoughts about, which is one, the economy and where we're headed. And two, maybe we could talk about deficits and debt. We seem to we were in that conversation a few years ago.
We could be the only two people having the conversation.
Yeah, right, exactly. So, I don't know. Do you want to talk about where either the economy, where the economy is going to be in 6 months or a year, or how long we're going to be at these high?
Yeah, I can talk. Let me say a few things about it. I mean, first thing I just emphasize to everybody, because it is so easy to sort of get inundated with all these numbers and stuff, but we are literally living history. I mean, this is an extraordinary period, and you get the April jobs report, and you lose 20 million jobs in a month. The previous large was 2 million when we were demobilizing after World War II. The previous largest when we were just having an economic cycle was 830,000, in the 1949 recession. I mean, so this is just such an enormous event. If most of the forecasts are right, we're falling at a rate of an annual rate of roughly 40%. So we're going to lose 10% of national income in the second quarter alone. In 1932, the worst of the Great Depression, we lost 12%. So we're going to experience that in the spring. And so it's just hard to sort of give due to the magnitude of the downdraft here. And it's just enormous. And the stunning thing was the onset. Like, the second quarter is going to be like all these huge numbers, but the first quarter, January, February, no big deal. March, first half, fine. GDP comes in at down 5%. In the final 2 weeks of March, enough things fell apart to pull it down, including households. It was this one blew my mind. Household spending fell at an annualized rate of about 7.8%. Half of that was health services. People stopped going to the doctor. So that's the power of fear, and that's the power of the pandemic. Consumer confidence falls at a record amount, and all of these things. And so when you think about that onset and the powerful downdraft, you have to realize the forces you have to reverse to get the economy to grow again. And fear is going to be paramount in addressing it. People are going to be afraid to go out. Obviously, I wouldn't want to be in the airline industry, the restaurant industry, hotels in the near term. People may be afraid to go to work. So I think a lot. I'm actually in my workplace. For those who don't know this, I've continued to come to the office every day. I'm the only one. So I'm practicing the sort of social distancing that I'm a career-long social distancer, but now I've actually got it all to myself. And,
it's finally worked out for you.
Yeah, geez, drove them all the way finally. And so I think a lot about what's it going to take to get my staff back in here. Like, what would that look like? And So that's a big thing. And for some businesses, it's going to be fear of operating. Like, will they end up with be getting sued for someone that gets sick in the workplace and things like that? What's that going to look like? So there are a lot of things about this which I think will make it hard to recover quickly. I think it's going to be tough. And everyone thinks that governors reopen the economy, but the truth is people do. And they will reopen it when they're ready to, and not 1 minute before, and that's going to be that. So I'm in the camp as not predicting a big V. Like this is going to be a fairly protracted climb out. No reason not to believe it won't start growing probably in the third quarter. But I, if you're falling at 40 and you turn around and you grow at 5, that's going to feel great. But you're still but it's way behind. I mean, that's all.
Right.
And so that just means that unemployment remains elevated. We go through a lot of fits and starts on restructuring. Like this reminds me, I'm officially old. This reminds me of the period after September 11th, 2001, because we had found a new threat to the population. It was called terrorism. We had to address the threat. Now it's a virus. And then we also had to figure out how to operate the economy in the presence of terrorism. That meant inspect every container coming into the country. We'd never done that before. Then put bollards in front of every headquarters building so they couldn't be targets. There was all of this money, effort, and ingenuity devoted to the security mission. That's what's going to happen here.
Yeah.
All these employers are going to think, okay, how can I work safely, as opposed to how can I make my company bigger and hire more people? And so I think that gets in the way of a quick recovery. We'll recover, but it'll take a little while.
So do you think, to that point, do you think that productivity and efficiency will no longer go up because of the changes that employers are going to make?
I think we're going to devote
how they hire and where people are.
Yeah, I mean, it's going to affect everything. So, it'll affect the investment. Like you could have a pure productivity enhancing investment, or one that makes people feel better about the workplace. And you do the latter and you give up some productivity. And that's going to be that. But one of the joys of my office is that if I don't move, the lights go out. So I have to do this. There we go. It just looks like I have a disorder. Don't ignore it.
Right. All of a sudden my arms have to wave, right? This is sort of a different question, and it's one that I've been thinking about a bit, and I don't know how it's going to pan out, but this you had mentioned, when are people going to be comfortable coming back to work? And obviously there's a big discussion about testing, and have you thought about what happens and what government's role is when we have testing? And I go back to my job at Burger King or at the GM plant, and I test positive and they don't let me in, or they do let me in, I get people sick. Like, are there employer and employee protections that government needs to weigh in on when they have this massive testing, if we ever have that?
I think this is one of the employer fears right now. Am I going to get sued for whatever time, no matter what I do?
Right.
Like at a fundamental level, you want employers to discriminate among their employees now, because some are more at risk than others. Some may test positive and others don't. And that's important information, and that's a part of the public health mission. But we have tons and tons of statute that says you may not do that. And the government's going to have to provide some guidance.
Yeah.
What is a set of workplace standards that are acceptable, right? OSHA, I assume, should be doing this, right? How do you set up an office in the presence of a coronavirus? I mean, I would like to know that.
Yeah.
So I think that's a real issue, and we're going to. I think the other thing that troubles me a little about the sort of current discussion is people seem to be picking a favorite. Like, I want a vaccine, and I want better tests, and I think of tests, therapeutics, and vaccines as substitutes for one another. Like, if we had a fantastic antiviral, which the next day you were fine, who cares about testing? Who cares about vaccines, right?
Yeah.
I mean, progress on any of those fronts should be, rewarded, and I think we should be trying harder on all fronts simultaneously.
Mm-hmm.
Like by the standards of the CARES Act, if you're going to spend $2 trillion, 3 moonshots on the health front are chump change. I mean, the payoff is enormous.
Right. I just worry about the prospect of discrimination based on other characteristics. So you could say, sure, you've tested positive, but really I just don't like you because you are in this other potentially protected class, right?
I'm old. And so they say, okay, Doug, yeah, we just care a lot about you. Go home.
Right.
No, that's not.
No, you don't.
Yeah, that's a fair concern.
Yeah. I'll just I want to turn to the debt and deficit, but I'll just remind folks, if they have questions for Doug, feel free to use the chat window or just unmute yourself or raise your hand or whatever Zoom magic you want to use. So I thought we'd talk a little bit about the debt and the deficit. As you mentioned, it doesn't seem like anyone's really talking about it, but we spent trillions of dollars already, with more to come, I think. Where does this leave us both? I think, I mean, we don't need to talk about the politics of it, but there is obviously a big political discussion to have. But where does that leave us politically and economically for the foreseeable future?
So I don't have anything good to say about. Well, I have some. I take that back. First of all, again, the magnitudes are enormous. I never in my life thought we'd start the year with $1 trillion deficit, and probably end it with a $4 trillion deficit. Yeah. That's just stunning. But again, if the magnitude of the shock is 10% of GDP, you need a response that looks like 10% of GDP, and that's what they did. I mean, I think Congress deserves a lot of credit for getting those first three pieces through, Families First and CARES in particular on the economic front, and getting it done fast, getting it done big. It's all in this moment. The biggest mistake would be to sacrifice the economy for the sake of the budget. That would be a horrific sin. I say that as a CBO director. These numbers all are horrible, but it's necessary. And in this moment, we shouldn't skip. Right, get it done. But it does mean that roll the clock forward in 2023, 4, 5, somewhere. You've got a country whose government is sort of climbing out of this enormous hole. It's got a debt to GDP ratio that's over 100%, and it's got the baseline trajectory that's fundamentally unsustainable, as it was before we went in. So we got a big bump to that, and we have an unsustainable situation. A minimal condition will be for the country to stabilize debt relative to GDP. I mean, that's a minimal condition, and we've been unable to do that as a matter of the political economy. So now we're going to come out of this horrible experience with probably growth that we're not entirely satisfied with, and face the prospect of less spending, more taxes, or both. And they both, in my view. I don't see any way to do this without both. That's not going to be a great political moment, right? That you take a cranky populace and explain to them they have to do that. I think that's going to be tough. And so I know we're doing this for good reasons, and I applaud it, but I'm sobered by the scale of what we're got ourselves into.
Right. Are there pieces of either the CARES Act or the Family First Act or the legislation that they're working on now that you would that you think money should be put towards, or money, were there pieces of those legislations that you think were done well or done, were not spent in the right way, or not I don't want to say the right way, but the right places?
They all could have been done better. All right. So the poster child for this is the PPP out of the Small Business Association, the Paycheck Preservation Program. And, I don't want this to sound like I think it's a failure. There's this drumbeat out there that this thing failed. It got $500 billion out in a month. That's extraordinary. And absolutely needed. There's no question. However, going into it, when they put it at 350 and then had to raise it, they should have started at $1 trillion. If they wanted to do that program right, it was $1 trillion problem. And so it was fundamentally underfunded, and it came with, they did some things that I thought really were unfortunate choices. So first, the SBA. Last year, the SBA backed $28 billion in loans. Now they're being asked to do $600 billion. No entity scales itself 20 times overnight successfully. I mean,
especially when you can't bring people into the building.
I mean, there's just no way they were going to be able to pull that off. They had to, they should have done it with a bigger footprint, and that's a problem. I think if you look at the bank's perspective, the banks that beat them all up, but the Treasury refused to waive entirely the anti-money laundering requirements. So in those circumstances, you're being asked to shovel money out the door, and you know that later you might get prosecuted for financing a drug lord or a terrorist. Naturally, they gave it to their known customers. I mean, they'd already done due diligence on that, of course.
Yeah.
And so
Right.
that was really unfortunate. That was shooting ourselves in the foot. That was an avoidable error, no question about it. And then when they fixed quickly, is the original structure of this was, you asked the banks to originate non-performing loans. Like you're saying, go make a loan that's going to go bad. And then they told them they had to hold them on the balance sheet.
Yeah.
And so the bank's like, I don't really think this is a good idea. So they fixed that pretty quickly by setting up this facility for the Fed to buy them and get them off the balance sheet. They fixed that quickly. And in general, they've tried to fix things as they went, but it's just a hard problem.
Yeah. So from your perspective going forward, what is for the next round, which depending on who you're talking about, some are talking about the next bill, but what would you like to see for the next round of spending?
I'll be honest, I'm struggling a bit with the right way to formulate the next round. So one of the things we did is we did this on a sort of entity basis. Like, you're an unemployed person here. You're a small business here. You're a bigger business here. And I think we need to move it to activities. I think there's going to be the need to support the modifications necessary to get people into the workplace. Like that's going to be testing, it's going to be PPE, it's going to be literally physical modifications of production lines, and we will recover quicker on the whole the faster we get firms doing that. And so that's an activity that I think should be supported. And that doesn't have anything to do with the scale of it. And I think we need to move away from just sheer grants. I thought that the PPE is exactly right, which is just give money to firms, flood the economy with liquidity, keep workers attached to their boss, use the payroll, which is the most efficient way to write checks ever, as a way to get money to people. That all seemed right to me. But now we know some of these firms are going to fail. It's no longer a liquidity issue. It's a solvency problem, whether you're a restaurant or an airline or a hotel. I mean, there are going to be some who in this restructuring are not going to make it. So to me, that says you move toward a loan, subsidized loan framework, but people have to display the wherewithal to get the loan. And I think that structure is more important. To do this again. When the conversation lags,
that's right. I'll just wait for my kids. When my kids come in, I just do this. It's sort of a different
divine commentary on my
so I'll just prime or just ping people to, let us know if you have questions or things that you want to talk about. What are all the things that you've mentioned. So I want to back up a second, because I think a lot of things that I've heard people say in sort of my network and some of the things the sound is, or the comments are, we're going into a Great Depression. These businesses are going out of, a lot of business going out of business, and that's it. And nothing's ever going to come back again. Can you talk a little bit about how you see, because this has a finite event. And so how do you see things sort of, I don't know what the right term is, but there's a churn, and there's going to be businesses that come, some businesses are going to take over from businesses that went out of that close. And then there's a whole, as you mentioned, there's a whole new sector that's going to come out of this, be it changing workplace or online, what's the best Zoom thing, so.
This will have accelerated some things that probably would have happened anyway. Like I don't believe that in 2045 movies are going to be released only to theaters for first runs. That was not going to last. Right. We now know you can get movies lots of ways, and they'll just find a way to price first releases, and that'll be that. So there's some of that that's going to happen. There's some where there's going to be just an enormous amount of pain, but despite that, I'm not worried. In my experience, restaurants close a lot and new ones open a lot, and we're going to lose a lot of restaurants. And I don't want to sound callous. If you're in the restaurant business, this is going to be horrible. but I believe that we have the capacity to have new entry with very little problem there, and that'll take care of itself. And they'll probably look different, right? So, I think knowing what we know now, you're going to have more space in the kitchen, which are notoriously cramped, right? You're going to have to sort of figure out how to configure the workers safely, and you're going to have to spread the tables out probably, and you're going to have to, it's going to be much more expensive to have a sit-down meal at a restaurant. So people who like to eat out and are relatively affluent are going to do that. And the rest of us are going to be with me getting takeout from P.F. Chang's. I mean, it's going to bifurcate more, I think, at least for a while. But that means there's an enormous amount of loss, but it comes back. I'm not a Great Depression person because, we do start new businesses. I mean, and this is an opportunity to start, expand, and innovate, as well as to suffer enormous losses. We're going to do both. But the big difference is, we're not the Great Depression because the policymakers are not sitting doing nothing and or making it worse, right? The Fed has done an extraordinary job. As I said, I think the Congress deserves a lot of credit for what they've done so far. That's completely different than any narrative of that Great Depression. I mean, where there are mistakes made all the time.
Yeah. You mentioned this. You used the word affluent, and I wonder how you view inequality in whatever metric. Lots of ways to think about it. How inequality will be exacerbated coming out of this, and in addition, and along with the debt and the debt question that you already talked about, what's government's changing? Is the government's role going to change in in addressing that?
Well, it's going to be worse. Whether you want to measure by wealth or income, we know that wealth and income are highly correlated with health. So everything about this cuts toward greater inequality. The health shock exacerbates everything. So that's a reality. I don't think we've come to anything like a decent consensus on what to do about inequality, and so that I think that will remain an issue. For some people, it's just as a value, they are uncomfortable having so many affluent people coexist with poor people. Other people, that's not a problem, but other things are, like the policies that try to redistribute are the issue. So we've just bandied that about.
Yeah.
The frustrating thing has been that there is one thing that we all ought to be able to agree on, which is that there's huge return to skill and that educating people ought to be a priority. And yet we continue to have a K-12 system that doesn't educate a quarter to a third of Americans. And so we're setting ourselves up for a lot of inequality more than we need to, and then fighting about it. And so being ahead of this seems like the right way to go to me, but we never have.
Right.
I hope that changes. I mean, we are engaged in the world's largest natural experiment in homeschooling. Who knows what we're going to learn, right? Like,
I can tell you what I've learned as a parent. You need a lot of patience.
One of the true things I saw on the internet, there are a couple true things on the internet, and it said it takes a village to raise a child, but a distillery to homeschool one. And I think that's probably right.
Yes.
So at my homeschool, turning on the subtitles counts as a reading lesson. That's good. Someone else needs to do this.
Yeah. Our Spartan Athens lessons includes the movie Gladiator. That's how we're making our way through.
It's historically absolutely on mark.
It's absolutely on mark. I mean, So I guess I don't. So I'll just say it one more time. We don't need to go the full hour if people aren't going to ask questions, but go ahead.
You froze up for a second, but now I now understand what you're saying.
Okay. Yeah. I was just going to see if anyone wanted to ask questions, but I don't see people engaging. So maybe we'll just talk for a couple more minutes, and then we can go get an early lunch. Can you talk a little? Do you want to talk a little bit about what you and your team over at the Action Forum are doing these days?
Yeah. So we are a think tank, a 501c3 public education enterprise, but we're built differently than the traditional think tank. The traditional think tank is a college campus without students that hires deep subject matter experts and says, go think, figure out lines of research that you think will be productive and valuable and push the the frontiers of knowledge. And periodically, you know, the world will run into you and you'll be relevant, and then you'll go back in your office and do that again. And that's a mission I've been engaged in other parts of my life, and I understand that. I built AAF to on the basis of my experience at the Council of Economic Advisors, CBO, and on the McCain campaign, where I ran the domestic and economic policy shop. In those jobs, you do policy research, education, options, advice, but you do it in a very particular way. Mm-hmm. You work on whatever is happening that day. Like, you don't have the luxury of saying, you know, I'm a turtle migration specialist. You know, when that comes up, give me a call. No, right. Your boss needs to know about X. You work on X. And so you work on whatever's happening that day. You don't have all the subject matter expertise in-house. You have it outside. You know who to call to get the best 1 hour memo on this thing. And you deliver it, whatever your product is, in English to non-specialists. There's a big premium on the communications element. And you have to be cognizant of the politics. I mean, there is no point in running up the flagpole, something that you know, your candidate in the McCain case was against last year. Like, it's just, you know, that's just silly, no matter what you think of the virtues. So I thought that had value to my political superiors in those jobs. And I thought the American public would benefit from that as well. So that's what we do. We work on whatever is happening. So right now, everyone in my shop is looking at the HEROES Act for the pieces that are relevant to their area and evaluating them. What are they? Are they big, small, good, bad? And evaluating the policy so that we can write digestible length pieces for the folks who read us. And usually our audience is Hill, White House, or executive branch staffers. That's by and large it, agency staff and the Hill staff. And then, you know, the interested parties in the lobbying world and things like that. And that's an inside DC sort of operation. The remarkable thing about the CARES Act is and to give you metrics, if we get, you know, 1,500 to 5,000 hits on a paper, that's really good.
Yeah.
We got 100,000 hits on CARES Act pieces. I mean, just mind blowing. Yeah. And as I said, you know, I'm in the office, so because I'm the only one here, I forwarded the main line to my desk phone, and I have turned into a career counselor to the American public. I know this nice woman, Nancy, who's a cabin attendant for Southwest Airlines, and she was trying to figure out what she should do about a buyout they offered her versus what would come in the CARES package. Yeah. Talking to people about hazard pay. Like, it's been a remarkable experience because we're writing on the things that are going on. So that's what we do. It's a little different, but I enjoy it. Yeah.
Is it has it been a challenge to teach the folks that work on your team how to write in that way for that audience?
Yeah. I mean, here we go again. One of the things I benefited from is Harvey Rosen, who was my dissertation advisor, longtime co-author and friend, is a great writer. And he painfully turned me into a pretty good writer by just forcing me to write, rewrite. I mean, his capacity to take a piece that I thought was absolutely perfect and rewrite it better is just phenomenal. But it's a skill I really benefited from, because if you can write quickly and well, this is a town that will value that skill highly. And so we spent a lot of time thinking about the writing, but more than anything else, the decision I made when I started it was that I would be the research director. You know, one of the things I learned at CBO is I liked team research. Like, let's all get together on this project and sort of think about what we should do, and then sort of governing that process. But the communications guys would figure out how to deliver it. So if they want paper, they get paper. If they want video, they get video. We've done Hulu ads. We've done everything under the sun. Pandora. You get to pick. How do we release it? And it does matter, because we've learned if you put up an 8-page white paper, people land on it, they stay for 30 seconds. If you put an executive summary on it, they stay for about 40 seconds. If you have an infographic or graph or something that they can see, they'll stay on that for about a minute. But if you do a video about the same content, they'll watch it for 2.5 minutes. Right. So, you know, they've revealed how they want the delivery. And so often we write something knowing we're essentially going to read it to a camera later, and that'll be that.
Right. Yeah. So there's a question for you here in the chat box, in the chat window. I don't know if you have it open, but
well, I can't read it without my glasses, so that's it. Here we go. The fundamental systems of our economy. This is from Sam Mendelson.
Mm-hmm.
What has this taught us about the fundamentals or systems of our economy? Well, I think we learned a couple of things. Number one, we've always thought that the sort of market system on which we rely heavily, but not exclusively, did need other government support. Like you just can't do it without some of the institutions we have. The institution that has been most important in this has been the Federal Reserve, because when the virus hit, it basically produced these cascading cash flow crises in the economy. Like you can think of the airlines suddenly have no customers, hotels, no customers, restaurants, no customers. So everyone was like, I got to get my hands on some cash. I owe people money. I have payroll, I have problems. And we saw this massive sell-off that roiled financial markets, and the Fed very quickly set up all these sort of special lending facilities and rolled out tons of liquidity. And they said to the world, we will buy treasuries, as many of them, for as long as we need to. Just an open-ended commitment to supply cash to the economy. And it worked in that it insulated the financial system from the disruption in the real economy. And had they not done that, and we saw the banks falling down, think how much worse this would be. Financial markets, by and large, worked. Banks are by and large functioning, and that's a remarkable accomplishment in this moment. So I think we learned, like, the Fed's a good thing, and not picking out anyone in particular, like the President of the United States. Don't screw with it, and that's a bad idea. So I think we learned that. I think we're going to have another painful lesson in got to figure out how to cover people. Like, we have the potential to lose. So of those 20 million people who are uninsured or are unemployed, of those, a good guess is that we've got about 10 million who are in the employer-sponsored market, and they are at risk of losing their coverage at some point. And we've never been able to figure out how to get this done. And it's really, I think, a huge weakness for us not to have come to a consensus on how to cover people, and to have so many people exposed, especially in this moment. That's that. So we've seen some good and we've seen some bad.
Yeah. So Nick Shaw has a question for you. I'll just read it out. What is your outlook on residential home prices? What policies will impact them the most?
So, among the stunning statistics in all of this is go back and look at the first quarter GDP report and look at residential construction.
Yeah.
24% in an annual rate up. We were about to have a real estate boom. We had seen this shortness in supply that was about to happen, and it just got hammered. So I think, like a lot of markets, we're going to see the housing market down, no question. We're despite the forbearance and other things, you're probably going to see some distressed sales and things like that. So my outlook for housing prices, which wasn't super robust to begin with, is flattened out considerably. I mean, it's going to toggle around zero over the next year and pick up to some modest amount in 2021.
Right. So I think if no one else has any other questions, I don't think we need to. I mean, I love talking to you, Doug, but we don't have to.
It's great to see you. Genuinely, thank you for both having me and for taking the time to listen. It's a compliment, and I appreciate it. And
thank you.
Everyone stay safe.
Yeah, you as well. Enjoy the quiet office. As my son and I were talking about this morning, in a year from now, we'll all be lamenting that we have to run to this thing, into this thing, into this thing, and don't have the solitude and the quiet. But at least we'll be healthy. So thanks a lot. I appreciate it. Thanks everybody for coming on, and stay safe and stay healthy. Okay. Thanks a lot, Doug.
See ya.
Okay. Take care. Bye.